Hi there, this is Chris from MoneyHub, and this video looks at low interest credit cards. So we've put together this guide, which I've linked to down below, and this is going to be the basis of my video here. I'm just going to talk through some of the things to be aware of, and basically must-know facts, rules, and some best practice, and then some tips around the credit card application process. So I just wanted to say that we've seen a few banks offer these low interest cards, and they don't seem to move the interest rates once they've announced them. Right now, we're calling low interest 12 to 13%, which is kind of still quite high for an interest rate. But of course, when standard credit cards have purchase rates or interest rates of like between 20 and 26%, then paying 13% if you do end up having to pay interest rates on a credit card or interest on a credit card, then it is much lower than, those sort of more premium or standard credit cards. So I've made some comments around here, and I've just said that there's no such thing as a real cheap credit card or a low interest credit card. By definition, they're still going to charge you a lot of money. And we have seen that many people get these cards and think, oh, well, it's only 13%, but it's more of an insidious charge, because if you don't pay the balance off in full, say you rack up $1,000 and you pay off 200, then you're paying 13% a year, say on the remaining $800. But if you keep adding to it and it's long-term debt, it turns into long-term debt, then it's just expensive. And 13% on an average $800, it's fine. It's like $100 per year, but it's $100 a year plus the amount that you own. So sorry to sound kind of quite stern with this. We're just worried that people are getting into these low interest credit cards thinking it's cheap, but reality is it's not. And we've had a lot of emails from people with large amounts that they owe, sometimes $5,000, sometimes even more, $10,000, such a lot of money. And then they're on a low interest card, but that's still costing them, it's costing them like $1,000 a year, and they've still got to pay off the balance, and it just becomes a bit too much, to be honest. So we've seen a lot of problems with that. We don't want people getting these credit cards and then just, putting money on them putting expenses on them, unless they're needs. But even then, there's always alternatives. So we've just put together, some commentary around here. I want to go on and say, what is a low interest credit card? As I've touched on, it's exactly what it says. By definition, you are paying a lower interest rate than standard credit cards. It's not going to offer you rewards in most cases, cashback, air points, or anything like that. But you offset that with a low interest rate. And low interest rates usually come with some sort of balance transfer. That means if you've got an existing credit card or some sort of store card or something like a Q card or whatever, then if you're successful in your application, you can move the balance over. And usually the interest rate's around 0% for 6 months while you try and pay off that balance. Of course, once it's over, it'll either revert to a standard interest rate, which will be the 13% of the low interest card, or it will be a balance for life. An interest rate, hopefully it's a balance for life. I mean, an interest rate for the life of the balance, and then your purchase rate is different to that. But it's, these costs still, add up, and I can't sort of underestimate or understate how terrible credit card interest is and how much money is spent on it every year in New Zealand. And I know that probably makes it more acceptable, but it's such a thief. And I've written stuff around that in newspaper columns. It's threaded throughout MoneyHub with research that I've looked at. But the problem is people still pay it. So what is the best low interest credit card? The answer there is really the best card is going to be one with a low interest rate, like really low, like 12, 13% type of deal, a very low or zero annual fee. This means that you're not having to pay, $30, $50 a year to spend your own money. And then if you do have a balance transfer, then one with an interest-free period. Sorry, if you do have a balance to transfer, one with an interest-free period, which is being offered, and then some sort of interest-free period for new purchases. We're not encouraging people to not pay off bills, and sort of roll everything over on interest-free, but that arguably does make it more attractive as a card if you do run the risk of not being able to make the payments every month. So bearing in mind that you won't pay any interest if you get a new credit card or any type of credit card for the first 44 to 55 days or up to that, on your new purchases. Once your statement's issued showing that this is what you owe, then you've got the due date, and then if you don't make the full payment, you'll pay interest on what's left over, which is where things get a little bit tricky because those costs can be high. And so that's what I've said. 13%, 13% interest rates, even though we're in a period of higher interest rates than we were historically a few years ago, this is still very expensive. So four rules of low interest credit cards that we've put together. Really important to prioritize repaying your balance on time. Really, this is going to make such a difference between having a card which you use for convenience and then a card which is just expensive and a hassle and a guilt and not just a really bad vibe. And I can't really say it any other way, because that is what a low interest credit card can turn into when you've got a large balance owing on it and you don't have the money to repay on it. And then if you're struggling, please make sure that you make the monthly repayments, the minimums. So those are going to be between 2 and 5%. We've got a guide here, which I'm just going to click on, and you can see that the banks offer sort of a different rates based on. Sorry, just going to the right guide here. The banks vary between what they actually charge. And so Kiwi Bank, for example, and TSB is 5%. And then, so you have to make a minimum of 5% of the balance, whereas the likes of BNZ is 2%. And then Amex is, say, for example, 3% ASB. So we keep these up to date all the time. You're just seeing this from April 2023 when this video was recorded. But that's just worth knowing that, these need to be paid off. So make sure you make the minimum, otherwise it'll go into default. But we really want people to be paying off the full balance or as much as possible, just to avoid this low interest, which is still money you have to spend. And then for the application process, we've seen a lot of people rejected. We've heard this through our user base and just people are writing to us when they come to us with some commentary when they've been rejected. They haven't, used any of the information or anything, but this is what they're finding, is that they've put together a case, they've made the application, but something's gone wrong and they've been rejected. Often it's down now to affordability. Can you afford to make other repayments? How much other debt have you got? And if you do have lots of other debt, I'm not talking about house debt so much, but more about loans, car finance, other credit cards, other store cards, then the banks or any credit card issuer will be reluctant or possibly nervous to, issue more debt. So be aware that that's something that you need to be aware of, that to be able to do a full and complete application and be lendable in the eyes of the credit card issuer, you do need to have cleared up any bad, sort of a bad debt history or any kind of spots on your record. So be aware that that is part of the process now. It's not just the fact that the banks are all looking for customers. With the state of the New Zealand long-term economy, they've done that in the past, but now, things that have changed, and we foresee that being the situation for some time. So be aware that you need to have a strong application. People who are self-employed, that's a problem. We've seen, rejections there. People who've got, inconsistent work, students, things like that. So just be, be hypersensitive to the fact that your application needs to be as strong as possible. And we've also suggested that if you're going to do this, combine a low interest offer with a balance transfer offer. This way, you're really going to kill two birds with one stone, because going forward, you'll have a low interest credit card should you not be able to repay the full balance. But with the balance transfer, you can bring over a whole bunch of debt, which is costing you money if you have it, and put it down at 0% or whatever the interest rate is, and then just work to really repay that. Of course, if you do have any existing credit cards and they're being balance transferred over, or you're going to be primarily using the low interest credit card, please chop up or cancel the other credit card. Otherwise you risk, and it's very easy to do, to have 2 credit cards or even more, and they all need to be repaid, and they all charge interest, and it is just dreadful. So please act very cautiously with these cards, because they are debt, even if it's disguised as low interest. So I'm just going to go through and have a look at some of the offers here and just show you how they work. So if I just show you one from the Cooperative Bank, one from Westpac, and I'll show the ASB, and I'll also show the Kiwi Bank. And we're aware that lots of people do have a bank with the ANZ, so, and they don't love when new people come over to them, so they don't like their existing customers applying for these cards. From what we've seen in the past, that can change, but we've also listed the we've also listed the ANZ, and we've also listed the Amex card. So if I just go through these, you can see low rate, and of course these interest rates are subject to any time. This was recorded in 2023 in April, but I just want to show you how, what the things are looking at. So you can say that, you can see the offers here. So it's 2.69% is what you'll pay for the interest rate forever after, unless they change it. And then for the first 6 months, that if you make a purchase within the 6 months of your card and you can't repay it, then that is going to be charged at 2.99% rather than the standard 12.69%. So they've explained that in the terms below, which says that 2.99% is going to be from the 6 month that the day the account is opened. So be very aware that these can change at any time. I just want to explain how these look on the bank websites. Similar here, you've got the ANZ promoting its low rate Visa. They're saying 55 days interest free, which means that's a maximum of 55 days. And then they've said the important numbers. Here you go. You've got 12.90%. You've got a minimum credit limit, so you have to have at least $500 on the card which you can spend, and then they've got 55 days. And I don't believe with this one there is a fee, but you can go down and see that, for balance transfers they're offering 1.99%, and then the annual fee is this, and then any other joint card if you want someone else to have a card. Probably not a great idea if you're trying to minimize credit card expenses. But these are just what the promotions look like. If I just move on, I'll look at the Kiwi Bank. So of course, a full disclaimer, these can change at any time, just showing you how they look and how they appear and what they mean. So here you can see the interest rate, 12.9%, and you can see that it's also 55 days and that there's no account fee. So they're very transparent with this, and you can just see that if you do a balance transfer from a non-Kiwi Bank credit card, so from any other credit card issued by a bank or an issuer like Amex or Q MasterCard or something like that, the Gem Visa, then you will pay 1.99% for 6 months, and then it'll jump up to 12.9%. And then you also see that there's late payment fees, and of course there's other fees like foreign exchange with every other card, but that's just that's just what it is. With the ASB card, you can see here that they've called it the Visa Lite, and they're promoting themselves with a low interest rate of 13.5%. Of course, this can change at any time. I have to keep saying that. And then you can see that if you make a purchase of over $1,000 or more, then you'll get a 0% for 6 months. So if you buy a computer, you buy something which is necessary, or it doesn't have to be necessary. I'm just trying to be a bit conservative. I.e., if you bought a holiday, yes, you'd also probably be covered by this of $1,000 0%, because if the transaction was over $1,000. So just be aware that that's another benefit from that card. And then it explains more about the smart rate. It's a single purchase. And you can see that, there's further information. You can do a 0% balance transfer. That is what they're currently offering. So whenever you do look at these pages and they're all linked from MoneyHub, make sure you go through everything that's on offer. that you properly understand it, so that you can see, okay, well, this is what the purchase rate is. It's higher than someone else, but then I get this 0% benefit and the balance transfer is there. So you want to just be comparing apples with apples. And then I'll just quickly move on to two others. So we've got the one from Westpac, and they're very strict in the fact that it's no fees. So they're very clear about that. 55 interest days, interest-free days. And then, what's the actual interest rate? Let's come down and find that. 12.9%. And then if you balance transfer, okay, this is higher than, other people's at the time. It's 5.95%, but then that's for the life as well. And then if you withdraw money from actual, like an ATM and physical cash, then you'll pay 19.95%. So this is the fees that they're charging. And so there's a whole bunch of things to consider, as I said, with the previous ASB one. So these are just, how to interpret the Westpac one, for example. And then finally, you've got the cooperative bank, and they've also got a 0% for 6 months. And you can see that after 6 months, the interest rate will go up to 12.95% for any balance transfer. And then the standard the standard interest rate is going to be 12.95%, subject to change. And of course, when you're applying to these, they are very strict in the application, and so you do need to put your best foot forward. So if I just go back to the credit card minimum, so the low interest credit cards here, you can see that the best practice is, we've said here, if you have an existing credit card that you're struggling to pay off, applying for a low interest card is a way to keep the interest rates down, especially if you can combine it with that balance transfer and have a card which is going to keep that interest rate as low as possible for as long as possible. And please set a limit that you're comfortable with, and make sure that you can make more than the minimum repayment. We really don't want people to get into credit card debt. A lot of the MoneyHub guides are saying, what's the best credit card? Well, for most people, it's no credit card, and we're not being snobby by saying that. We're not being rude. It's just the fact that there's so much credit card debt out in New Zealand, and it's all generating huge amounts of revenue for the banks, who, charge the interest and get their customers to pay it. We don't want that to be you. We want to minimize all this, and that's why we're putting together these videos to tell people, if you're going to do it, please think about it and minimize the number of credit cards you have down to hopefully one, and then keep a low limit and make sure the balance is always being paid off as much as possible, or full if you can. So thanks very much for watching. This is our comprehensive guide. If you do have any questions, we like to keep our guides as strong as possible and as useful as possible. So leave a comment down below, and we're very responsive to answering them. And we want to make sure that everybody is well resourced to navigate the high interest credit cards that exist, and also the low interest credit cards. So please, if you do have any questions, we would very much love to hear from you. Thanks very much for watching, and best of luck with your credit card choices.